Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So this is a 1 hour chart of gold in front of us. And yesterday, after the retail sales report, we saw some recovery on the chart of DXY. And the most important thing I noticed about the chart of DXY is that DXY has formed higher lows, and you can see that market is trying to recover right now. Overall, if you look at the chart of DXY, then DXY was in strong uptrend for the last couple of months, and then we saw massive recovery. Okay, and right now we can see that DXY is somehow trying to regain the momentum again. So yes, there is a possibility that DXY may try to go up again. DXY may resume the uptrend again, though we do not have any strong fundamental factor that will push DXY towards the upside, but the chart is saying that yes, buyers on the chart of DXY are trying to do so because market is forming higher lows in the market. Okay, so let's wait and watch. Just keep in mind, today we have got some news again. This is economic calendar. You can see initial jobless claims. So there will be some volatility during the US session again. So please be careful. And if you look at the Forex sentiment meter, then we can see that the short position from the retail traders have decreased and the long position have increased. So retail traders short position is 67% and long position is 32%. And if I take the currency strength meter here, then the currency strength meter is right now saying that USD is the strongest currency right now, most bullish currency. So yes, there is a possibility that DXY may try to recover more. Okay, now let's head towards gold. Right now gold is standing at 1765. The wedge pattern that we have been talking about worked nicely, and market could not cross the previous high of 1785. So 1785 is the new resistance for gold. Previously we were looking at 1800 level. We were looking at 1800 level as the next resistance, but right now before 1800 level we can see that 1785 to 1786 is the new resistance for gold right now. The overall chart of gold is very bullish, but if we just focus on the present trend of gold here, because most of us prefer to go for day trading, so yes, if you look at the present trend, then we can see a sideways market. So for day traders, 1785.86 is the valid resistance. Till yesterday, 1765, yes, 1765 was also working as a temporary support for the market, if you remember correctly, 1765-67 level. But right now 1765 level, 1767, this level is no longer required. So the next support for gold, listen to me carefully, the next support for gold will be around 1756. Why? Let me show you. You can see previously market reversing from this level. Market has taken support, not very big support, but market has somehow taken support around this level. So yes, right now with the ongoing volatility, we can expect the market to take support and bounce. So when market will reach 1756, 1755 level, observe the market and see how the market is reacting. If you see hammer patterns like this, if you see market taking support around 1756 level, you can go for a buy position. At least you can expect a profit of 30 to 40 pips. Okay, after 30-40 pips, if you see that market is kind of struggling again, market is showing red candles, you can exit from the trade. And if you see a good bounce, then you can continue the trade. Okay, but yes, there is a possibility 1756, 55, 54, this level may act as a support for the market, because right now this is the next immediate support on the chart of gold. But in case during the European session, okay, in case during the European session market forms a big red candle, then this level will not be able to hold the market. The reason is that because we do not have any strong support. Okay, previously market has taken support, okay, for a pullback, that's a different chapter. But is this a good support? No, this is not a very strong support. So in case a heavy sell comes, then obviously this level will not be able to provide support to the market. In that case, you can expect the market to bounce. You can expect the market to bounce from 1746 to 1744 level. This level has the higher chance of providing support to the market because of this. See, we have got Fibonacci 23.6% retracement level in this level area. Plus, market is not showing extreme selling pressure right now. So whenever we get selling pressure like this, high chance of market taking support at the Fibonacci 23.6% or some support levels like this. See, as I always say, volatility plays a big role in the market. Okay, and after all, volatility only decides whether the market will bounce from a certain level or not. For example, in case of extreme selling pressure comes, especially during the US session, then obviously no level will work here. No level will work here. In that case, you can expect only the 200 moving average to provide support to the market, or the support of 1730 to 25, because previously that level acted as support resistance for the market, which will now act as the new support. So the strength of all the levels are not equal. It differs, and volatility, yes, it obviously plays a big role in the market. Okay, so my dear friends, whatever you do, follow proper risk management. See, this is my analysis. I can be wrong as well. No trader is 100% accurate after all. So in case market shows upside, okay, in case market shows upside, looking at the present market condition, there's a high chance that market will reverse from 1785 to 86. But already market has tested this 4 to 5 times, so please be careful. Do not trade without proper confirmation. If you see market reversing from 1785 86 level, market forming shooting star pattern, market showing price rejection from above, then only take a sell position. After all, it's your hard-earned money. Don't forget that. Okay, do not gamble with your hard-earned money. So my dear friends, this is it. Hopefully you all have understood. Okay, do not trade in the middle of the chart, because you will be compromising with the risk to reward ratio. Okay, so bye bye, take care, see you tomorrow again. All the best, and yes, do not gamble. Okay, bye bye.